Um, that said, today I wasn't privy to the amazing tools that we have, continuing to find out that we have at Giving Tree. So, and this is going to be kind of like the second part of refinances for the purposes of refinance, and then a few other extra tools that I'm going to cover that was just that I just recently found out. So I'm going to go ahead and share you my screen. Okay. And we're going to go over a few of the tools that are at our disposal, at your expense, that you can use, okay, that I really think that's necessary on a daily basis, okay, especially for the refinance right now. So this is, you guys all should have a mortgage calculator, right? That's just a given. That's a hunter without a knife. That's a hunter without a girl going out nicely for a cocktail hour without heels, right? A guy without a coat or a jacket. You have to have a mortgage calculator, okay? Giving Tree has one. I did not know that. I apologize. And it's a nice one. It's colorful. It's all, it's detailed out. Instead of you trying to figure this out on Google or a mortgage calculator, it is all here for you. So we're going to kind of quickly go into a live scenario here, and we're going to go through this together. When you are selling that refinance, okay? So what we're going to do is we're going to use just for all intents and purposes, we're going to use this scenario here, okay, of an $800,000 purchase price, right? And this is obviously editable, guys, okay? And if this wasn't already provided to you, after this call, I'll send an email containing the links to all these calculators and where you can access it on Notion, okay?
The access is already given to the Google Drive.
Okay, great, guys. Thank you, Peter. So let's say someone about 6 months ago, 6 months ago, not 5 months ago. I mean, unless you close it within 6 or after 6 months, not 4 months ago, but let's say 6 months ago, someone purchased an $800,000 house. Let's keep the math simple. At 20% of 800,000 is 160,000 there. Notice here immediately to your right, these numbers are going to change. Okay, that's your LTV. Okay, so right, $160,000 represents 20% down payment. Let's footnote that their loan amount is $640,000. Right, this is a 30-year fixed rate. Let's just assume at, I don't know, I'm going to go ahead and just use 7.5 rate. Okay, 6 months ago. Okay, so if this was a purchase, this is perfect for you too, right? Client wants to know exactly, let's just say you don't have access to Calyx Point, right, where you can kind of filter it all in, but you're on your phone and someone wants to know, hey, roughly what is it going to be a payment if I buy this $800,000 and I do 20%? Well, you have Google Drive now. You can access this Google Sheet, a mortgage calculator, and you can just quickly plug it in these numbers, and it breaks down the principal and interest for you. Property taxes, again, it footnotes there or side notes there that it's 1.25% of the purchase price, which is what we want to use for all purposes or all purchase files, unless you know that there is Melrose or special assessments. Okay, so let me cover that real quick too. Generally speaking, in the state of California, right, property taxes start with a 1% base tax rate, right? Just 1%. It's actually, I think, like 0.9 something. Okay, but we just use 1%. That's a base. Now, for every home in America, not just California, right? There are schools, there are street lights, there are parks, there are I don't know, irrigation and plumbing and trash and sewage, right? This stuff is not free, right? usually these are passed through to homeowners by way of property taxes. And so there are going to be additional fees or rates that the city or the county or the state itself will charge. And that's how we get to on average of 1.25% for your property taxes, right? So something for you to know as you're a mortgage loan officer. Someone says, hey, what are property taxes in California? Well, you just say, hey, on average, and what we use to qualify in Southern California is 1.25. The state base is 1%, and you have all these add-ons for ancillary services like parks and recreation, schools, street lights. It comes out to be at 1.25. Now, just know, and you can always put the disclaimer, just know that your property taxes could be less. In my city of Placentia, on average, it's about 1.18. And so usually after my first year, you'll get a special assessment. We can talk about that later, or a supplemental tax. Thereafter, if my mortgage servicer hasn't recalculated my property taxes, I usually get a refund back of a few $100s, right? Because again, my mortgage company calculated off of 1.25, but in actuality, it might be 1.18, 1.21, in which the homeowner will get a refund. But for you as a mortgage loan officer, it's 1.25. Now, there will be scenario or cases, and there's a lot more of these now because of new home builds. Remember, pretty much anything after, again, this is just a ballpark, this is just my experience, any home built after 2000s, okay, there may be some type of Mello-Roos or special assessments that will effectively make that 1.25% higher, okay? Be very mindful of that when you are, qualifying your client, okay? While, again, the base that we use is 1.25, in cities like Fontana, Irvine, Jurupa Valley, Corona, many of these new home builds that have been built post 2000, your effective tax rate instead of 1.25 might be 1.65, 1.7, 1.8, and even 2%. Okay, so please be very, very mindful of that. Okay, now if it is, you're gonna have to make the adjustment manually here. Okay, you go in, instead of 1.25, it might be 1.75. Now your taxes go from 830 to 1100 plus. Okay, so make sure you make that change manually. Very, very crucial, guys. I'm telling you right now, if you miss that, it can be literally the difference between making someone qualifying and someone not qualifying. Okay, homeowners insurance, right? 35 basis points is what the calculator is using. I would say right now, prior to the pandemic, that is very, very, very rich, very conservative, if you will. Rates for homeowners insurance. I know that the insurance brokers used to use a 25% variable. I personally, I could attest to you that it was closer to maybe even like 15 if you shop it around. Again, this is post or prior to the pandemic. Right now, I'm sure the creator of this already factored this in, but right, home insurance, premiums right now in Southern California and California in general is very high. So 35% is, or 35 basis points is not unreasonable or unfair. It's just what it is, right? So if I change this right now to on average, a $1.4 million house right now in Orange County, Fullerton, and we do 20%, let's go do 0.20 of 1.4, right? Yeah, it's not unusual to see a $300+ a month insurance policy now, right? So like $3,500 a year in a premium right now. It is not unusual, but again, double check that with your borrower, okay? Because this calculator is smart in that if you do 20% or more, it just has it as false. There's no mortgage insurance tied to it. If I did, let's say, less than 20%, so I don't know, 140, and you'll notice that the down payment changes here to 17%, it automatically factors in mortgage insurance. Okay. Now, do note the 55% there, that is for FHA. Okay. So FHA, whether you do 3.5% down or you do 20% down or 30% down, the mortgage insurance rate, the PMI rate, is always 55. Okay. Now, for conventional, it can be less, it can be more. You're going to have to manually figure that out. I use Genworth. Genworth has a mortgage express, PMI Express. Let me see if I can look it up real quick. Rate Express, here it is. You might have to register for this. Yeah. So my other computer has this registered, but in any case, oh, here it is. Yeah, it's really easy. You can go through. Okay, let me just do this real quick. 640. Let's say LTV. Right now we're using the 85 zip code. Purchase primary for rate. I'm just going to put 4040 DTI. Just want to show you this real quick. Let's say 780 FICO score, one person. Continue. And I could share this with you afterwards too if you have any questions. I don't know if Giving Tree has their own, but this is what I use. And we get 18% or 18 basis points. It's a $96 a month as opposed to 302. So very critical that you do this. Okay. Instead of putting 55, you'll put, what was it, 18? There it is, right? Okay, so you're gonna have to manually change this too. Okay. I want to show you guys something for conventional. Okay. Let's say your FICO score instead of 780 is 700. I want you to take a notice of how much different the rate becomes on insurance. 42 basis points. Okay. Did you guys catch that difference? It went from like 18 to 42. Okay. Just because your FICO score, though it's 700, because it dropped from 780, how much higher it is. Okay. I want to show you one more other thing though. If you change it to two people, okay, instead of just one borrower, you have two borrowers, it goes from 42 down to 32. So it also helps to have an additional borrower when it comes to the rate on the PMI. Okay, do you guys have any questions so far? Good? All right. So yeah, and if the property doesn't have HOA, then it doesn't have HOA. Okay? All right. So mark this number down. And really the only number you really need right now for the purposes of refinance is that 3957 number. Okay? 3957. Okay, because it's really I'm sorry, let's say 7.5. Well, it's 4615. I'm gonna round up 4615. So on a $660,000 loan amount at 7.5%, okay, when they bought this house 6 months ago, okay, on a 30-year rate or 30-year term, their principal and interest that they're paying is $46.15. Just the mortgage loan payment or note payment is $46.15. Right? Now, the rates dropped today. Okay, and even though it's a little bit higher, let's say you run your loan sifter, right? You run your loan sifter, and you price this out, and it's let's just say currently their balance is $650,000. Okay, so borrower calls you and says, "Hey, my loan balance right now is $650,000." And you go, "Hey, what's the rate today?" And you quote them a 6.5. Okay. I want to go through this real carefully, guys. I want you to hear what I'm saying, and I want to nitpick what's being said. Okay, because this is what you're going to be battling, okay? And what you're going to be confronted with. Says, oh, Hyuna, I want to refinance, and my balance right now is $650,000. Okay, I want to refinance that $650,000, right? She didn't say 640 or 660. She said, I want to refinance my principal balance at 650. And so you quote them a rate. Now, what I do, guys, is I always when I provide them the rate, I'll provide them the rate, but I'm going to build in some of the closing costs of $5,000. Okay, why? And I'm going to get to that why. So instead of 650, I'm just going to go 655. Okay, so at 655, at 6.5, your new payment, look at that. Instead of 46.15, it's 41.40. Okay. Now anyone can do the math on that. What's the savings? What's the delta there between the original payment of 46.15 and 41.40?
$500.
$500, right? Like 475, right? It's $475. Okay. Now, when you go to the reason why I build that in is because of this, is because does a question to you loan officers, when you do a refinance, are there costs involved in doing a refinance?
Yes.
Yes, there's always costs involved, small, minor, or not. There's going to be costs involved, and when a loan officer says, "Oh, there will not be any closing costs that you have to bring to there's no closing costs involved." What are the three things? Okay, what are the three things that they might mean? Anyone want to take a crack at it?
Rock, can you repeat that question, please?
Yeah. If a loan officer says to them, or a borrower says, "Hey," a loan officer says, there are no costs involved. Okay. What are the three ways that that can happen mechanically where a loan officer can say there's no closing costs involved?
Lender credit.
Yep. What else?
Like legit no closing costs involved?
No, they're just saying it.
Rolled into the loan.
Yep, there you go.
Third scenario will be a cash out.
Okay, cash out. Okay. The other one is it's semantics, guys. Okay, it's kind of like what I'm doing, right? Is when I say there are no closing costs, I'm saying there's no lender fees, right? So the idea is this: when you sell a refinance, is you have to understand people perceive closing costs differently, right? And for me, I break it down into three sections. And I think I went over this with you guys last week. Do you guys remember what those three sections are?
Lender fees, third-party fees, and impounds.
Perfect. Right? So I'm going to bring up a CD real quick. And I'm going to go over this real quick because I want you guys to really understand this. Okay? When it comes down to it, for me, I like to simplify things for my clients. And I always say that there's really three categories of fees. Number one is here, what you see, okay? Section A fees. Okay, Section A are all lender fees, okay? So when a loan officer tells your client, "Hey, I'm not going to charge anything, there's not going to be any fees," they might just be saying they're not charged. They themselves, literally, they themselves as a lender are not charging you, the client, or that client fees, right? So here, I was truly able to say, I'm not charging you any fees because I'm not. There is no admin, no origination, no processing or underwriting or discount points here. It's a big fat blank, right? So yes, I didn't lie to you when I told the client I am not charging you any fees. Okay. Now there can be other third-party fees, which include title and escrow. These are third-party fees, right? As an employee of GivingTree, you're not charging this appraisal fee. Core management is. You're not charging this credit report fee because KCB is, and so on and so forth, right? Title notary fees, the recording fee, the settlement fee, which is the escrow fee, right? These are all third-party fees. Okay, that benchmark that $2,800, and then everything else is what I just tell my clients: prepaids. Okay, prepaids. It's that simple. It's prepaids because why? Because these are not actually closing costs. These are not costs to do a loan. These are dollar amounts that you, the borrower or the client, would have to pay for, irregardless of a refinance or not, right? In 2 months, in 2 months in November, every homeowner is going to have to pay these, right? Property taxes and insurance. Well, insurance could be down the line, but they're going to have to pay for this. This prepaid interest, well, I'm going to argue you would have to pay more if you don't do the refinance, because this is prepaid interest that they would have to pay anyways to their current mortgage loan servicer for living in that house and having this loan. Here, I'm going to reduce that amount for you because we're going to do a refinance. And this interest represents, right, the day that we close to the end of the month. But it's going to be at a lower rate because it's going to be at a rate of 6.5 as opposed to their current 8%, right? So this is prepaids too. It's stuff that they have to pay for already. And this homeowner's insurance, this is actually incorrect. This wasn't there. So the borrower actually got a bigger refund. But yeah, that's a mistake. That was cleared. And the only other third-party fee really that should be in section B here, I think, is these government and recording fees, right? So again, the three sections, as C said, are lender, third-party, and prepaids. Prepaids, I already dispel, saying these are not fees. These are things that you have to pay for, irregardless if you refinance or not. You're gonna have to pay them. We're just collecting it up front, right? Section A, we are waiving because you're a returning customer. You're just responsible for the third-party fees. Now, in this case, third-party fees happens to be about $2,900 plus the $4,000, so about $3,500, and that's why I build in about $5,000 here. Okay, because we don't really know if, and every scenario is different, whether or not people impound their taxes and insurance or not, which I'll get to. Okay, but so what I do is I build it in, I tell them the rate, and I just give them the monthly amount, knowing that their monthly principal and interest payment every month is going to be lower than what they're paying now. And as C said earlier, it's about $500, right? So an email, you can snippet this, you can snip this and show them, right, what they're paying right now. Okay, start a new email. Okay, borrower, paste. You can show them this is your payment now, right? Your current payment now, right? And however you want to do this, you can show them just the payment, and then you want to snippet what it's going to be, which is this, right? And you just show them the rate and that amount, right? And you're gonna have a comparison, and then you could say, currently you're paying, $5,000. Okay, with the refinance, your payment's going to be, $4,500, and you could put that this is a difference of what, $500 a month savings, right? Sorry, misspelling. And you can bold it, highlight it, right? Do all of that. Okay, $500 a month savings, right? So that's kind of like step one, if you will. And that's probably the bread and butter. People you don't want to necessarily always, you want to focus on the rate, of course, right? So the number 2 can be rate drop from, or rate difference of 8% to 6.5. So you just want to highlight, right, the savings that your borrowers are going to be receiving. Okay, so they're going to get a reduced rate from 8% to 6.5. Their payment's going to reduce from $5,000 to $4,500, which is $500 a month. And then the last thing is another calculator that we have, and that's the interest. Okay, so we were using, again, what, a $6,500 or $650,000. What's going on here? At 7.5, right? So check this out, guys. So this is an interest, or this is an amortization schedule, loan calculator. Okay, so you plug in the loan amount and the interest rate. You determine the term. Let's say they got a 15-year. Okay, but we're going to go with 30. Oops. We're going to go with 30. Then you could change the date, make it more, more realistic to affect or to reflect today's date. Let's say it's going to be 10/1/2024. But anyways, the power of this tool, and you could even do interest only here, but really what I use this calculator for is this number right here. These two numbers. You guys see that? Okay. So when someone takes on a $650,000 loan amount at a rate of 7.5% over the life of the loan for 30 years, assuming they're going to have this loan for 30 years and not do anything else with it, that loan amount of 650 is actually become 1.636 out of pocket. It's a lot, right? It's a lot. Okay. Now, but what do we use? What do I use? What you use this tool for is when you refinance it from a 7.5 and we're going to go to a 6.5, look at this number difference. Boom. You're saving them what? Someone can beat me to the math or no? Let me see. $170,000-ish? $157,000. I was way off. You're saving them $150,000 of interest. That's what you're also highlighting. Okay, so this calculator, what I use it for again, is to detail out how much interest they're going to be saving over the life of their loan. It matters to some people. Now, for some people, you're not telling them, hey, you're going to keep this loan for 30 years and this is what you're going to save. You're not saying that. You are telling them only, hey, I'm going to help you save $150,000 of interest. That's all you're saying. You're not saying if you were to keep this loan for 30 years, you would save this. No, all you're saying is, I'm going to help you save, or you're going to save $157,000 of interest. Right? Now, another thing that you can use this for is this. Do you guys notice the interest payment here? Some people ask that about that. Hey, Ragnar, on what amount of my mortgage payment is just the interest? Okay, on a 7.5, okay, you'll be shocked too, is $4,000. Okay, on a 6.5, it's a $5,300 payment. That's actually the monthly payment, but that's what you're highlighting. But that's what you're going to actually see here. Okay, is that $500 difference? Some people, that's what matters to them, right? So you're going to highlight, okay, $500 monthly savings. Okay, they don't necessarily really know that this is all tied in together. You're just highlighting the numbers for them. Okay, Any questions up to there? Any questions? No? Okay. I want to, before I wrap this up with the other calculators, I do want to go over this as I promised. The reason I build this in is this, is when you sell the fact that there is going to be a $475 savings, that is what they're going to, their mind is already set on that 475. Okay, does that make sense? And that 475 is saved with the fees already rolled in. Okay, what I've come to learn is this, and you guys can disagree. Peter might have a different experience. C might have a different experience, and so on. Is people generally do not like to bring funds to the table for closing. Okay, I'm going to repeat that again. If we did 650, okay, remember, going back, the borrower says, hey, I want to refinance my loan, Hyunam, and I have $650,000. I want to just refinance my 650. They might be actually telling you it's because they don't want to increase their loan amount, or two, they don't want to bring anything to the table. They're just telling you, I only want to do this, and that's all. They're not necessarily thinking that there's actually fees associated to this. And more or less, they don't want to pay out of pocket. They don't want to go to the escrow signing table, sign the loan docs, and the notary says, hey, this is where you need to wire your $5,000, or if it's impounds, or $12,000, right? They don't want to do that, okay? And so I just naturally build it in there and sell them on, hey, you not having to come to the table, you're already saving $475, okay? As opposed to having to battle them at 650, they might be saving a little bit more, but now you have to fight them on, hey, you have to bring $5,000 to the closing table to pay for title, escrow, and all these other fees. Does that make sense, guys? Sell them on you already banking in the fees. Now I can say, if I was Hyuna and the client says, hey, what's my monthly savings? And you take them through all of that, and you go, sir, you don't have to bring a single penny to closing. There's no fees, right? And they say, well, the loan amount is higher. Well, sir, when you do a refinance, there's always going to be third-party fees. I've already told you that we are going to take care of all your Section 8 fees. Okay, there's going to be nothing, but there are, because you have to re-record the note, and you have to get a new, insurance policy on it, the title policy, that is the title insurance. There are fees, but look, we're going to bake that in. You don't have to take care of anything. You're still going to get a low rate. You're still going to save $500 a month. That's an easier sell than having to convince someone to bring in more money now. Okay, I can promise you that. Okay, now the other way again is you take a higher interest rate. You might have to take a 7% rate, use that rebate to cover those fees. Okay, but I can tell you this is not a preferred route for most people either, because why? They want to know they're getting the lower rate. Okay, I can tell you right now, most people, when it comes to a refinance, they don't want to take the higher rate to cover their fees. They rather just build it into the loan amount, knowing that you've already convinced them, sold them on the monthly savings in the interest savings. Do you guys have any questions? Yes, no, makes sense? Sounds good. You guys think you can go out there and sell a refinance? Yeah. Real quickly, there are other tools here. I'm just going to share right now real quickly and go over it. In addition to, because I wasn't privy to these two at GivingTree, and these are great. Right, you have your mortgage calculator. I use daily. I have my own form, but I do use it daily. You have the mortgage loan interest calculator. These are tools you're going to use with every file on a refinance, okay? A couple others are, and we can go over this in the next session, is helping someone with their affordability. Okay, these are actually really good. I've been around the block about 14 years in lending. This is really good. So we'll kind of go over these next time. This is how to calculate income. We'll go into calculating income. We'll do a session on DTI and calculating income. So we do have that there. But again, for the purpose of refinance, these are the two that that I want you guys to get familiar with, and as especially you will probably be using it on a very, very consistent basis. Any questions? See, anything you want to add that do you think I may have missed?
No, it was really good. Very, very educational. I know on these calls, Ragnar likes us to share our own methods, right? So whether I'm doing a purchase or a refinance, right? My question is always, what's your budget? What are you comfortable with on a monthly basis? And I know there's a specific name for this tactic. I don't really use it as a tactic, but for example, if your monthly payment currently is $5,000 and you tell me you like to save at least $1,000 a month, right? Regardless of the interest rate, if I could do that for you, do we have an agreement? Yes. Okay. So yes, the $1,000 that you want to save, I could definitely do for you. Oh, and by the way, your interest rate's X, right? So for me, it's almost like we almost got the buy-in first, and then it's like, here's the rate. That's just something that I do. I don't know, maybe sometimes people see it as deceiving, but let's have the conversation of addressing your needs and wants first, and then worry about what that number is.
Very good. Very good. Peter, did you want to add anything?
You went over many things. So when we have a Calyx point training, the ones that you have shown us can be just plugged in manually, so we can issue the loan estimate within minutes. Because all this calculation is actually the headache. But if you can do the heavy work, heavy lifting before, you can generate the documents a lot faster.
Yeah, so for those of you who are in the office more behind a computer, definitely you could just kind of plug and play in Calyx Point, which is our origination system. I just personally, again, this is just my opinion. I like sitting behind these type of two calculators to see the numbers and then to sell it, right? I could just pinpoint what I need, the interest savings, the monthly calculation differences. Obviously, you're going to have Loan Sifter up as well to see what the mortgage rates are doing. But irregardless of that, if you even know a general ballpark of the rate, what it is today, and someone with a 7.25, let's just say someone comes with you with a 7% right now, and Ragnar, is it a good time to refinance right now? You say, yeah, it is, right? One, find out it hasn't been 6 months since they purchased or refinanced. And if it's 7%, rates are in the low sixes right now, even perhaps in the high fives right now, right? And off the top of your head, especially if it's a bigger loan amount, right? Obviously, the higher the loan amount right now, the more savings someone's going to see, right? If it's a $300,000 loan amount or $200,000, it's going to be a hard sell because they might only be saving $80 or $100. Peter, remind me, I know with government, you have to at least see $100 savings, correct? I'm not sure if that's true.
You either have to have a 5% payment reduction and or 5% of a rate reduction. The payment reduction and the rate reduction both have to apply.
Gotcha. Okay. Yeah. So for the smaller loan amounts, the benefit might not be there, going from a 7% to a 6.75 or 6.5. But with the higher dollar amounts that we are working with here in Orange County, particularly, you are going to see that kind of savings, 300, 400, 500. It's a lot of money, guys. Don't think that's not enough of a benefit for people. That's a whole month's worth of car gasoline for a car, right? But with those tools, you can readily change, right? And make sure you have your email. I have it again on my phone with my sheets, right? They're all in here. You have access to. You can't probably see it, but yeah, it's all in my phone where I can just plug and play. Whether I'm at a party or at the park or my son's football game, people just want to know, right? Again, it's creating conversation. So go out there, continue the dialogue, and get used to these tools. All right, guys, that's it for me.
Rodney, very quick. I'm on Google Drive right now. I don't have access to those calculators.
Okay.
Ragnar, can you click share and then check? Or let me see.
Yeah, I have it.
So what I recommend all of you to do is once you have the access, don't use it right away. Click the arrow button on the upper right and create your own so that you can micromanage the details. So if you go to Google Drive, GivingTree Lending's email will show all these. However, let's see, for those who came in today, let me see if I can manually add. So I'm going to add you guys as a viewer, but I'm gonna leave the setting as is, so you can click and copy and then use it for your own. Good.
Yeah, make sure you just did what Peter said because he's giving you a free tool. All right.
And we are building a GivingTree homepage, a rate calculator as well. For what Ragnar showed us, it has everything except the interest only function. So, but whenever it's fully ready, then we'll share in the team meeting. Any other questions?